Hi, friends. Chris Kelly here. Well, late in the week, time to get a video out about what's going on in the market, what's going on with interest rates, what's going on in the world of real estate. So I got a really good article today and thank you, Kelly, for sending it. And we'll talk a little bit about that. But before I jump into it, let's just take a quick lap around the interest rate, or excuse me, the market stats, and see what's going on. So, pending sales back up. God, they're up 49% from last week, which is great. We had some pretty low and dismal numbers. Our solds are still pretty low, though they're up 11% from last week. So, another 30 to 40 sales. And mind you, this is Portland Metro wide, so that's not giant. But listing inventory, it's come down even a little bit. So, that persistent, we don't have enough inventory issue is still an issue. As far as market pace, average median days on the market here, 18 and 48 and 18 respectively, looks an awful lot like 2019. In fact, it looks almost exactly like 2019 in pace. Median sales price, average sales price, 5.25, 593. This, like I said, those numbers just kind of bounce. They've really just been bouncing around there for the most part. Again, I was looking at some other graphs today that I'm not going to get into in this video at any length, but long and short of it is, in general, rates or pricing fell and kind of rose back up, and then it's just been kind of, lumbering along. So, this number, obviously, these numbers change if you're looking at just Gresham or you're looking at just Tigard or, wherever you're at within the Portland Metro market. Obviously, if you or somebody has a more specific question about the city you're in or the zip code you're in or the type of real estate you're in or all the above, we can address that on a case by case. But in general, this number has just been kind of bouncing around, and the timing of the market has slowed some. So those numbers have gone up a little bit, but we're not into the same. But even look at in 2021, we were in the heart of busy, right? We were as fast as it gets, as robust as it gets. The average was still 24. Granted, the median was 7, but we've basically 2.5 that. We're still not in a slow market by any stretch. And now we've been kind of at the pace we've been at for long enough. Eventually it stops feeling shocking. Things kind of are the way they are. And that's what I always say, on the primary residence side. And what I mean when I say that is, home buyer or a family buying a home, going to go out and buy a home, not the investor or the developer or people that have maybe different, more business agendas. They're going to continue to do what they're doing. A lot of folks, though, obviously are waiting on the sidelines, either because they've been priced out with interest rates. It's a little shocking when if you looked at things 2 years ago at 3% or 3 and whatever, and now you're looking at a 7% rate. That's a pretty big payment difference, very big. And pricing hasn't come down. So you're looking at basically the same price with 2.5 times the cost of money. That's daunting, and that's been daunting. But all that said, people are getting on with their lives because people need to get on with their lives. That's just how it is. However, all that said, like I said at the beginning of this, there's a great article, and it's an investor article. So it's really speaking to investors, and it talks really about, I think the headline of the article is the best time to buy real estate in over 15 months is right now, and here's why. And they go into it. So I'm going to link this in the article, in this post or in the email, wherever you get it. So it's worth reading. Again, it's speaking to investors, and investors have more of a need or more of a tendency to time the market because they're either buying to flip or they're buying to make short-term a short-term play. Somebody's buying a rental property and they're going to keep it for a bunch of years, a little different. But this article really speaks to the investor that's trying to time the market and maximize equity. So that I've never been a big advocate of trying to time the market where buying for your family is concerned. You buy because it's the right time in your life, and you hold it over time, and over time it does well. History has said that every single time. Or I should say in every circumstance. But, here was an interesting read, and I'm probably going to print it or type it out as well, but it may seem contradictory to accept the current high interest rates and buy, only to sit and watch rates fall for everyone else as they jump into the market all at once. But that's exactly what you must do to win big right now. We're on the back end of an interest rate trend, which is now on the clock. That means that interest rates probably won't go up anymore, meaning pricing will drop only slightly between now and year's end. Once rates begin to be cut, demand will increase and prices will immediately start to skyrocket, I'd say go up again. By this time, it will be too late. Well, that's exactly what I've been saying here. Rates are going to come down, and when they do, pricing is going to go up immediately. So you're hearing somebody talk about that on the investor side of things. You know what? To the extent that it can be tolerated or stomached or afforded, the higher interest rate for now might still result in the better set of circumstances for you and your family. I did a graphic on that, or I presented a graphic on that a few weeks back. That kind of talked about here's what it costs to buy it, here's what it costs to refinance it versus waiting. And again, that's the drum I'm going to keep beating. To the extent that makes good sense from an economic standpoint, and to the extent that a person's has the wherewithal, the financial wherewithal to do that, it's just math. It either makes good sense mathematically or it doesn't. The risk in it, of course, how long is it going to take before interest rates go down? This article seemed fairly bullish about that. Some of the folks that I listen to seem fairly bullish about that. There's a lot of other people in the marketplace that aren't nearly as bullish about the timing. I think everybody thinks that rates are going to peak and are going to start down. The question is really when and to what extent. Again, if you're looking at something for a longer play, it's less relevant. Anyway, I thought that was an interesting article. I'll have it attached here for your reading pleasure, and we'll go from there. And with that, I'm going to cut this a little short. I guess I should probably always cut these shorter, but I haven't. As always, here for you. I'm here for your friends and family. If somebody you know or you has questions and you're going through hey, what should I be doing here and how should I be doing it? I'm happy to help. There's no charge for that. I don't hit the clock like an attorney when I'm giving advice and helping people. We get paid to help people buy and sell real estate, and if and when that happens, and you want and need our help, that's when we get compensated. But we're always here to help with good input and good advice, so that you and yours can make good decisions. So if that's something that you think you could benefit from, feel free and reach out and let us know. All right, as I always say, till the next time.